All right, welcome to part two of depreciating your food truck equipment. In part one, I showed you how to fill it out using the double declining balance, the half-year convention, and the useful life of 5 years. And I showed you how to do that for the first year, which is usually straightforward. It's easy to find on the internet. That was the case for us at least. But what was different is, what do I do in year two, or year three, year four, year five, etc.? I couldn't find that information as easily. But when you dig through and actually read all this information on the site, you'll eventually find your answer. So I'm going to summarize it and simplify it for you. So if you're in year two, following my original example, you bought something in 2024. Whoops. It's now 2025, and you're like, how do I keep depreciating this? Well, here's your answer. So when it's not the first year, you actually fill it out on line 17 of form 4562. Now, you don't need to refill out any of this. You're in your second year of depreciation. This stuff is all assumed, right? If the IRS wanted to see any of this, they can just go to the prior year's tax forms that you submitted and say, oh, okay, this is what they're doing. They're using this method at the moment. So it's just assumed. You're going to put the number right here. Now you're in 2025. Last year you did $5,000 worth of depreciation. This year, since you made your chart, you don't have to do it again. You don't have to run these calculations again. You're going to depreciate $8,000. That's all it is. You just take it and you put it here. 8,000. And then you're done. And that's how simple it is. Now, there is one caveat to this rule, right? You can use the double declining balance up until the point that the straight line method becomes greater. So here I depreciate 5,000. If I was using the straight line method, it would only have been 2,500. In the second year, it's 8,000. Straight line method is only 5,000. But in the third year, it's 4,800 for the double declining balance. And in the third year for the straight line method, it's 5,000. So the year it becomes more beneficial essentially to use the straight line method, that is when you're supposed to switch to using straight line instead of double declining balance. So if this was year two in 2026, you're going to switch to this method. And this is how the straight line method works. This is directly from examples on the IRS website. And it seems confusing, or it seems like it should be calculated a different way, but I'm giving you an example here and using the calculation the exact way that they do on their website. I did the reading and research for you, so you don't have to. Right? So let's assume that it started at 25,000 again. You're going to do the half-year convention, so that doesn't change. Whatever the number is, you'll end up multiplying it by 0.5. Since it's year one of a 5-year useful life, the rate in year one is 1 divided by 5, which is going to be 20%. In year two, it's going to be 1 divided by 4.5, because there are now 4.5 years left of depreciation. So that's how you get the rate in year two. In year three, because again, this is not a full year. So that's a half year. This is 1 year. So if you start off with 5 years, you take away a half year. Here, there are 4.5 years left. Now in year three, there are 3.5 years left. So the rate is going to be 1 over 3.5. Here, it's going to be 1 over 2.5, 1 over 1.5. And whenever it becomes 1 over 1 or less, you just depreciate the remaining balance. So because there's 2,500 left, in this year, you'll depreciate 2,500. All right, and that's all for this. That wraps up this depreciation section and the rules and caveats in helping you understand how this actually works and gets calculated. There's another way to do this, and that's using the rate tables on the IRS website. Honestly, I just found it more confusing than using the actual formulas to do it on your own. You can build these tables. You can reach out to us if you want to use our table, and we'll send it to you. But this is the gist. Let us know what you think. Let us know if something was confusing, and and please hit the subscribe button.